Germany has promised 500 billion. So there's serious money coming from Europe, and definitely looks like a stock set to capitalize on it.
I agree. It's a multi-trillion market opportunity, but not in the hand-waving sense, but literally budgets have been assigned. The 10-year revenue curve looks like a beautiful wave, just going up, up, up. Like just to put in perspective, by the end of 2021, the revenue was shy of 600 million kroner. And as I said a minute ago, by the end of December 2024, it was 1.8 billion kroner. So the curve just goes right up. Every week, I'm delighted to see more people join Stock Club, especially because we've set a goal to double our podcast audience by the end of 2025. If you like our show and you want to support what we do, the best way is to click the subscribe button below. In exchange, I promise we'll keep bringing you researched market insights, detailed stock pitches, chats, laughs, and lengthy descriptions of graphs, which everybody loves. Thank you. Let's get on with the show.
Emmet, how are we getting on?
Howdy, Mike. You well?
I'm good. Yeah, this is interesting. Paddy's Day is on a Monday, which I was thinking about it. Is that the worst day for Paddy's Day, or is it the best day for Paddy's Day? Because it almost feels like you've got Friday, Saturday, and Sunday, and then the Monday off, you know?
It depends if you do damage to yourself on the actual Paddy's Day. Like if you're a non-drinker.
I'd say you'd run out of gas by Monday is what I mean. Like,
I
think it's kind
of... I think it's the best day for it because the bank holiday confusion over here in Ireland, as most of our listeners know, you got the next Monday off. Or no, you get the actual day off. Isn't that right?
Paddy's Day is always the day off.
That day.
So,
So it's a Wednesday. It's
Tuesday or something. It's almost useless.
Yeah, it's useless. No, I think it's a great day to have Paddy's Day Monday. What about you?
Yeah, I think so. I mean, I don't know. I feel like it's got a bigger Paddy's Day has a bigger influence in culture and like outside of Ireland and stuff compared to when you were 15 and drinking in a field because it was Paddy's Day. Maybe that's a bit unpatriotic of me, but I don't know. I feel like it's not as big a deal.
I lived in New Zealand in, I think it was 2002. And on the morning of St. Patrick's Day, I had banging on my front door of my kind of apartment / I don't know what it was, housey apartment thing. And it was a couple of fellas I'd befriended who were of Maori descent. And I was their first Irish friend. And I opened doors, morning lads, what's up? And I come on, we're going to the pub. And I was like, what? Sure, it's only 10:30. We're not going anywhere near a pub. Come on. So I was like, all right, okay. And you don't challenge a 20, with Maori blood, you don't challenge a 20-something-year-old Irishman to start drinking at 10:30 in the morning because you lose, right? So anyway, we went to a pub called The Bog, which was in a suburb called Parnell, which I hope is still there. It's a great spot. So we went over, I'd say for 11:30 or 12, Guinness was served up. By 1 o'clock, the two lads were on their ear. They were burnt out. The day was done. And I went back to my apartment to finish the stuff I had to do. And by the way, there's a Hall of Fame, or at least there was way back then, 20-something years ago, in the Bog in Parnell. And because I was bored, I'd go there every night and just chat with people but I got my name on the Hall of Fame. Yeah. Now, I think I had to drink a certain amount of Guinness to get up there, which just came naturally. But that was one of my better St. Patrick's Day memories, where by 1 o'clock I was back across the road ironing my shirts for Monday or whatever it was.
I like that, all right. Yeah, it almost feels like it's a bigger deal when you're away from Ireland and there's Paddy's Day somewhere else. You almost feel like you have to represent your country a bit more or something.
Oh, yeah. You get more Irish, 100%. Like, 100%, look at America. Boston closes on Paddy's Day. So I was in conversation via email with somebody in California yesterday. And I said, look, sorry, I can't reach you Monday. It's a national holiday here, St. Patrick's Day. And he goes, oh, you're like Boston. And I was like, no.
Boston's like us.
No. St. Patrick came to our island and kicked the snakes off this island, not Boston.
Okay. Well, sure. Look, it's all ahead of us. This is going to go out on Thursday. It could be that could be the start of 5 days of Paddy's Days.
Yeah. Yeah.
But let's talk stocks to kick us off, and some interesting stuff going on in terms of a potential new Fed chair. So you read this was in the Financial Times this week, is that correct?
Yeah, yeah, it was a very interesting article, and as you know, I slacked you just suggesting we have a chat about it. And last week, uh, there was an article in the FT which was headlined "Druckonomics: Wall Street Veteran Poised to Shape the New U.S. Economic Order." And this really grabbed my eye because really we need to know the shape, or we at least try and we should have a rough idea of the intent of the Fed and the current administration of the United States and of the SEC. But before I dive in, I just want to say something, Mike, and I have to emphasize that I have put myself, as have you, out front and center of the world for expressing an opinion on anything and everything to do with stock investing. But I do keep my political views very private for a variety of reasons. And that's politics here in Ireland, where I pay taxes. So I especially don't ever wish to get into debates about political parties and leaders in other nations, no matter how much news incites me to do so. And I could summarize my views on every US president as follows: I want them to succeed. Like, why wouldn't I? So I mention that because this story really does touch on the borders of political opinion, and it's unavoidable. So, as it says in the piece, Stanley Druckenmiller is revered on Wall Street. And the reason that he's not, and the reason for that is he has never had a down year.
Never had it down here.
After,
It's nuts.
it's absolutely nuts. I mean,
Yeah.
after decades and decades, 30 years of running his own hedge fund and family office, which he subsequently set up and has kind of run for about 14 years, he has never had a down year, which mind blowing. That's akin to black magic. Um, and it appears, and to the nature of this story, it appears that two of his protégés are now firmly within President Trump's inner circle. So if you know what Stanley Druckenmiller stands for, you get a rough idea of in what direction the ship is headed, I think, anyway. And that's why I thought it was a conversation worth having. But let me tell our listeners a little bit about Stanley Druckenmiller's history, because he is up there with Warren Buffett and other greats with respect to like having an incredible track history. I mean, the only difference, I was chatting with my wife about this last night, the only difference between him and Warren Buffett is Warren Buffett started ostensibly something like
In the
70 years ago.
60s
Yeah,
compared
yeah.
to, yeah,
I think it was 1950.
was it 50s or 60s?
Maybe, God, yeah, he had a limited partnership
But sure,
agreement.
no, he was before that. Wasn't he buying stocks when he was like 10 years of age?
Oh, yeah. So, like, look, Warren is 90 something. So he's
Yeah,
80
so
something years
80
at it.
something years. Yeah, yeah.
Yeah, yeah. And Druckenmiller is really only at it for 40 something years.
Yeah,
He's
he's
71
famously
years old.
George Soros' protege.
Yeah, exactly. So
Yeah.
let me just tell our listeners a little bit about him. And certain Horizon subscribers will recall his name because of a stock I pitched, which I'll mention in a minute. And he was born in Pittsburgh, which I believe is in Pennsylvania, in 1953. And he grew up in a middle-class family. So he didn't grow up with a silver spoon in his mouth, though he absolutely has one now. His dad was a chemical engineer. His parents divorced when he was young. And he went to school in Virginia, and in a school called Bowdoin. I don't know if it's a well-known one. And he went to a small liberal arts college in Maine and eventually got his first job in 1976 in Pittsburgh National Bank, which I presume is a local bank. And it is there he kind of developed this strong affinity for Pennsylvania and for stock investing. And during that, as a side hustle, while working there at that bank, he set up Duquesne, which for our listeners is spelled Duquesne, Duquesne, as a side hustle with about 800 grand. So we received this big break, as you rightfully said, Mike, in the late 80s, 1988, when George Soros hired him as his hedge fund, for his hedge fund, and he stayed there until the year 2000, when he went off to go do the Duquesne thing full time. And he first hired a guy called Scott Betsson. So remember that name, at Soros Fund Management about 30 years ago. So alongside Soros, Druckenmiller and Betsson went on to make an infamous windfall by shorting the British pound in 1992, which was well known to anybody who was our age back then. And it's really a move that went down in history because it was the trade that was known as the trade that broke the Bank of England.
Yeah.
So Betsson then started his own hedge fund, Key Square Capital, which was launched with money from Druckenmiller. Okay, so that's Act 1, Scene 1. Now, Kevin Warsh is the other name you need to remember. He worked as a partner with Duquesne since 2011, when Druckenmiller converted it into a family office. And in 2017, Warsh lost out to Jay Powell as President Trump's replacement for Janet Yellen as the Fed chair. However, now, today, Scott Bessent is President Trump's Treasury Secretary, and Kevin Warsh is the forerunner, the frontrunner to be the next Federal Reserve chair. And again, coming back to that FT piece, which caught my eye, it said, Druckenmiller's views on economic policy have suddenly become more consequential. So I think all of that is to explain that Druckenmiller, excuse me, all of that is to say that Druckenmiller's influence into the most influential camps in America and ostensibly the world are firmly in place. And it's worth mentioning, Druckenmiller has mentored dozens of investors during his long career, but he was especially close to these two lads, Bessent and Warsh, which has been described with people familiar with the matter as a father-son relationship. And as in, I suppose, irrelevant interlude, Druckenmiller recently increased his position in a stock called Natera by 80%, which it makes it the largest stock in his portfolio. And it is a stock that I pitched in Horizon. And I've since removed it from my watch list just for listeners' interest. But Natera, I would imagine, is going to go from strength to strength. I think it's going to be a great investment. I just haven't invested in it and don't intend to do so. But it is his largest holding. Now, Druckenmiller has supported Republicans over the years, but he did not donate to Donald Trump's campaign. But now not only is Druck somewhat of a financial wizard, but as I said, he has a dotted line into the most important policymakers in the world. So his influence is going to be very likely felt or indirectly felt.
Yeah, and how so? Because for many people, Druckenmiller could be one of the best investors of all time. He's right up there in that conversation. So how will that influence manifest over the coming years?
Yeah, I mean, that's the question. I mean, and it's a good one because, if you were to just hear of Druckenmiller in an elevator pitch, you'd go, oh, yeah, he's the type of guy you'd want influencing the president and the president's men. But in a nutshell, the two guys that he has totally embody the way Druckenmiller interprets markets and economic policy, and apparently they echo Stan's language is how it's said. So Stan Druckenmiller, and so all of this is hardly surprising to say that the word on the street is that Druckenmiller and Warsh communicate constantly. They are constantly in conversation. There's texts and calls. And again, according to that FT piece, which really opened my eyes to the extent of that relationship, they speak more than a dozen times a day. Now, Bessent, the other guy, is currently now in a very formal role. So they're in less frequent contact. And I presume the nature of their calls are different, where Druckenmiller expresses his views in one direction and doesn't take views in the other, because that would be a breach, I guess, of very clearly defined lines. So they are an extension of Druckenmiller. So what does he think? Because that's the question really you asked. What if those two guys are, I don't want to say his puppets because I don't want to reduce them to that, but if their thinking is so tightly aligned, what does Stanley Druckenmiller think? Well, for more than a decade, he has been fixated on the US budget deficit, which he has described as a debt bomb. And he's used that term so often. If you just Google Stanley Druckenmiller and debt bomb, you're going to see so many references to him referencing that over the last 10 years. And he has severely criticized what he sees as excessive spending on entitlements such as Social Security, headline assistance programs like Medicare and Medicaid. I always forget which one is the one for every person. Is it I think it's Medicare is the one that you get no matter who you are. And during the pandemic, he very publicly criticized the Fed for waiting too long to raise interest rates, which allowed inflation to surge. He is a pure capitalist. I think we can say. He'd never get a job in Irish politics. I think we can do. But again, going back to that FT piece, it says he does not always get it right. Having repeatedly warned of looming US recessions that never came to pass, Druckenmiller joked at a conference in October that he had forecast 6 of the past 4 recessions, admitting that I've been predicting a recession for like ever.
Yeah.
So overall, some of
Seems
his
to be
views...
a common trait among some of the biggest hedge fund managers that they all are just like Ray Dalio is the most famous one. I think he's predicted 25 of the last 3 recessions. Clifford Asness as well. They've all had a very bearish take on the U.S. economy while it's succeeded, and I think Clifford Asness famously is underperformed, while Druckenmiller can kind of have a helicopter view while still performing well in that market, if that makes sense. Which makes a lot of sense. It makes a lot of sense because he's George Soros' protege, who famously said, "If I see a bubble, I run towards it, not away from it." I'm paraphrasing that, but like because there's plenty of money to be made in a bubble. Was his thinking, anyways.
Yeah, there was a magician who lived in ancient London. I always picture as like Charles Dickens' time, and I wish I could remember his name. I read this in one of the many books that sit on the shelf opposite me here, and it was basically every day he woke up and he wrote on a piece of paper, "Today I will meet my maker and I will come to a grisly end." And he put it in his pocket. So one day he was actually hit by a horse and carriage and killed stone dead. And they found this piece of paper in his pocket. I went, what? This guy could tell the future. He foresaw his own death. And they went to his house and found a bin full of similar pieces of paper that went back. So it's analogous, I think, to what you said there. Eventually you're going to be right. If you call we're at peak bubble, and if you say that every day for 10 years, one of the days you'd be right for sure. But anyway, but Druckenmiller, like some of his opinions clash with President Trump's plans, and like the president's proposed tax cuts, but he is supportive of Trump's cost-cutting efforts. There's no question about it. They're completely aligned with his worldview, and it's reported that his clients rave about him. Why wouldn't they?
Why wouldn't they make him money?
Unreal. Like the Home Depot co-founder Ken Langone met Druckenmiller when he was at the National Bank way back in the 70s in Pittsburgh National Bank, and he invested into Kane Capital decades ago, and he's described Druckenmiller as a complete genius, the best investor I've ever known, talking about his character and his integrity. And, who's target with that? The guy has economic brilliance, whatever he's doing in there, it works, Yeah.
So what do you think are likely outcomes now of Druckenmiller having such a profound impact on economic policy in the US going forward?
Well, that's the $1 billion or $1 trillion question, like what ultimately are we looking at? So there's a couple of things we can say with degrees of certainty. For a start, we can say there will be tighter fiscal policy. So what that means in simple English is that his focus on debt could lead to spending cuts in entitlement programs and reducing deficits and sparking political pushback. And I think that's already begun. There's no
100%.
That ship has sailed, or sailing, if you will. Then the second one I would say is I would imagine we're going to see a hawkish Fed policy. And hawkish is just industry lingo for saying strict or aggressive stance on monetary policy. So if Warsh becomes, or rather when Warsh becomes the Fed chair next year, 2026, higher interest rates could curb inflation but slow market growth. So that would be a second outcome that I think is, more than probable. I'll just leave it at probable, because more than probable is certain. So it's probable. Then deregulation of markets. The SEC will probably roll back financial regulations, which will benefit Wall Street and increase market liquidity and risk-taking and growth going into growth stocks. And again, that's not hardly prophetic, because already we can see that President Trump is affiliating and going in strong in cryptocurrency, and its deregulation is probably going to happen in Eyes on Horizon, which is going out to our subscriber base today, Wednesday, 12th of March. We talk about I talk about the deregulation of autonomous vehicles, for example. So regulation, I think, is going to be loosened. I think there's going to be stronger dollar and stable coins. And I think Druckenmiller's influence on overall fiscal and monetary policy will increase market volatility at certain periods in time. So I think we could see strong swings in stocks. But at the end of the day, you choose a strategy, you stick with it through thick and thin, because strategies that work over the long term. And trying to read the tea leaves, trying to anticipate what's going to happen because a certain person has become president or chair of the SEC or whatever, is well, it's a different game. And when
It
you
is.
eventually
Yeah.
apply yourself to that game, like, for example, the best that we know is Morgan Housel. He will say, yeah, buy an index, because his brain has been scrambled by knowing too much about economics, whereas we go after fish. We're fishermen as opposed to just kind of
Trawler.
index buyers, trawlers. Yeah.
Yeah, yeah. Okay, well that's a good setup, because what we're moving on to next is closely related to that, and just looking at the current state of the stock market, um, it's gotten very bearish very
Mm,
quickly.
yeah.
Just less than a month ago, we were at all time highs for the S&P and the Nasdaq, and since then, a lot of it's come from Trump's administration, from the tariffs, and just the uncertainty around that.
Mm,
And what's made it interesting, I think, is that we've come to a stage where, for since the great financial crisis, the U.S. stocks have absolutely dominated the
yeah.
world stock market. Um, there's a lot of reasons for this. Look, it was like powered by tech stocks, obviously the power of Silicon Valley, and probably even more so the venture capital money that kind of came with that. That just was not matched in Europe, not really matched in China or Japan either. So US stocks since 2008, 2009 have absolutely destroyed international stocks. Now, this wasn't always the case. There's always been kind of a cyclical nature in terms of outperformance, where one US would dominate for 6, 7 years, then it would go to international stocks, back and forth,
Mm,
and so on. And like famously, the US stocks had a lost decade between 2000 and 2010, where they started with the dot-com bubble and they ended with the kind of coming out of the other side of the great financial crisis. So since then, it's been the biggest one-way street, one-sided fight you can imagine, up until 2025. And this is what I think is interesting, is that it's so early on, but it's an interesting talking point that we can get into, where the US seemed to be at this precipice of continued dominance in the wake of Trump's election. The Trump bump was a very real thing. And pretty much everyone expected kind of regulation light, oversight light administration focused on growth. Trump said that. Druckenmiller even said that. I think he said something along the lines of, this is the most growth focused administration of all time. Something
Biddy,
along
yeah.
those lines.
I
Yeah.
didn't read that, actually.
And then this tariff thing comes in, this kind of isolationist policy comes in, and more so the uncertainty of, okay, there's tariffs, there's not tariffs. We're not sure where we're going. It's took the
Mm,
S&P 500 down hard. And the people that are in power, as Trump or Musk or anyone else, it does seem like they don't care. Their comments are very much focused on, short-term pain now for long-term gain in the future.
mm,
What's interesting is that this stance has forced Europe to get the finger out and invest heavily in things like infrastructure and, in particular, defense.
mm,
We're seeing this investment show up in the public markets in a big way.
mm.
So I've collated a few stats from markets around the world so far in
Oh.
2025, and it paints a very interesting picture. So this is as of Wednesday, the 12th of March, when we're recording this. The Euro Stoxx 50 is up about 9%. That's kind of the main index for all of the EU. The global DAX Germany ETF is up about 20% year to date. No surprise, considering the government intends to allocate up to 500 billion in investment over the next few years.
Mhm.
The iShares MSCI Sweden ETF is up 17%. We've always been a big fan of the Swedish market and the stocks
Mhm.
that come out of there. The French market is up 16%. The FTSE
Mm.
100 in the UK is only up about 4%. The S&P 500 is down 5% year to date, but more pertinently, it's down about 9% from about a month ago when it was hitting all-time highs. So it's approaching correction territory, which is a big word.
Mhm.
It scares people. if we have actually a bad day today on Wednesday, it might already be in a correction by tomorrow, by when
Mm,
this episode goes out. The Nasdaq is already in correction territory, down about 13% from all-time highs about a month ago. In China, the Hang Seng index is up about 20% year to date as well. And then just for good measure, the Japanese, the Nikkei 225 is down about 6%. The Vanguard Australian shares index is down about 4%. So we're
mm,
seeing real outperformance in Europe for the first time in a long time.
yeah.
China as well. China was depressed for so long in terms of the stocks over there. So that's had to be some form of mean reversion by the end of it. But it's interesting how much has changed in such a short space of time. In terms of comments from the Trump administration, in terms of where their focus has shifted to, and then I guess just overall bearish sentiment. It's no
Mm,
surprise, I suppose, that we see a lack of consumer and corporate confidence happening now when the president is talking about, yeah, well, maybe there will be a recession, maybe there won't be. Do you know what I mean? But it'll be worth it, X, Y, Z.
mm,
So yeah, I don't know. It's very interesting, and I guess it just goes to show that while it might have been a strategy that cost you money over the last 10 or so years, maybe a bit more, there is a need for international diversification. And especially if this kind of isolationist policy becomes more and more commonplace across the world. So yeah, what are your thoughts on the
uh,
whole situation? This is such big, like big playing
thematic.
field here. We can kind of go any direction.
I saw a tweet from a guy last night who said, in 1999, I told everyone to go all in on Europe only. Well, today we just broke even. You're welcome.
Yeah, exactly.
Well, it's funny. I think, again, coming back to professional economists, they could look at what you described and say, well, that is the autobiography of the world. I bet you good economists can look at the movement of cash and tell this a high level story of what's going on in the world, the political story of what's going on in the world. And I think it's no shock that money has left the US market in recent times, where President Trump is rewiring, you could say, the economic relationship with virtually every other nation, and everyone is trying to figure what does this actually mean for us. But what I found unusual about what you said was that the Japanese market was down. I'm quite surprised at that, because I thought springtime is arriving right now, and you and I have discussed some really quality Japanese businesses in recent times. But it's unsurprising, because if in fact what would have been more surprising is if money went further into America in the last month or so. But as you said, what does it mean for me? Well, what it means for me is businesses I loved last week are now going on sale today, and I love
Hmm.
them more now. So, I mean, I feel like complete fraud talking about world economics, because really, even what you just explained to me there was to a point news. But to actually try and extrapolate where we're going is a tough call, especially in these volatile times.
Yeah, and I'm gonna be as intentionally flippant as possible with this question, but what
Mm,
I'm gonna say is, does it actually matter?
Yeah, no, you're dead right. That is the question, and
and
it's kind of back to that 20-year investment, 30-year investment
100%.
strategy.
And this is what I mean. Like, as in, if we zoom out, the pace at which people have become bearish and fearful, I think, is nuts, without context for what's come before it. So the
Mm,
Nasdaq was up. The Nasdaq's in the territory is in a correction now.
hmm
It was up threefold since the COVID lows. It's still up like over 150%. This is an
Yeah,
index, in the space of 5 years. We've had
yeah.
back-to-back years of 25% or more gains in the S&P 500. Four of the last six were at least 25%, with 2020 up 18% in a year that saw a genuine market crash in the
hmm
middle of it. Do you know what I
Yeah,
mean?
yeah.
2022 is thrown in the middle of all this, and it's a good example of people losing their minds when 100% of economists predicted a recession that never happened. And
Yeah.
I'm kind of ranting a bit here, and I don't know how coherent I'm being, but I just feel that we have very short memories in the stock market. It's how our
Oh, we
brains are
do.
wired, because fear is the most visceral emotion.
It is.
It used to keep us alive. The most fearful humans back in
Yeah.
the day were the ones that survived because they ran away first,
Yes.
And it's
Yes.
still this dominant feeling. It's a measured thing that the pain of losing money is felt twice as hard as the joy of gaining money.
Yeah.
So I guess what I'm finally getting around to saying is that what everyone is feeling now is normal. These sell-offs happen, but you've just experienced 2 years of an incredible bull market as well. It's not always supposed to be that easy.
Hmm.
And just, I suppose, go back to 2022. Remember how you felt then when things were a lot more bleak than they are now. The people out there who stayed investing throughout that period are sitting pretty right now, while those who sat on cash or even sold are certainly regretting their decisions, even after the last month's sell off. Unless
Yeah.
your retirement is on the horizon, you should kind of be enjoying these buying opportunities, which is so counterintuitive
It
because
is. Yeah.
how you feel when you buy, like, it's easy to buy when the stocks are going up. Do you know
Mm.
what I mean? Like,
Mm.
as in your emotions. Um, it's so simple to put money into your account, but if you're seeing red across the board and you feel like you're putting bad money after good, but
Yeah.
you're a testament to this. You've seen so many market downturns, invested through all of them. But even I'm known specifically from Horizon. I know your best investments from Horizon were through that 2022 period where
Mm.
stocks were absolutely going on sale. And I guess this is a testament to stock picking as such, as well, as you get given these opportunities, not a lot, but throughout your career you will get plenty of them.
Mm.
And so I don't know. I'm kind of ranting a bit. I'm
No,
not
I
sure
think
where I'm
that's
taking
very.
it.
I think that's very insightful. Like the basic bottom line is, how do you succeed at anything? Well, never quit. No matter what it is that you want to succeed at, never quit. Whether it's soccer, chess, science, rock climbing, stock investing. If you keep doing it year in, year out, through thick and thin, you will end up outstanding at that thing. So if we just put that there and then bring another point, which is the velocity and intensity of news over the last 10 years has accelerated to a point that could really, really fatigue the average person. And I'm talking about me. I'm the average person. The velocity intensity of news, just regular news, I'm talking about economic news, but whether it's the virus is out to get us, Ukraine has just been invaded by Russia, Palestine has been invaded by Israel. Like, we are getting a level and intensity of news, no matter what pocket of the internet we go to, it's going to shout at us. So whether you hang out on Twitter or X or BBC.com or RTE News or CNBC, those stories are going to be pushed front and center because, firstly, it's what brings the audience. It's what attracts the audience. People like flies to a light at nighttime are attracted to this kind of stuff, but it
Absolutely.
fatigues. It really is fatiguing effect. Now, when we bring in economic news and the fact that we are intelligent creatures trying to interpret what we're seeing right now, when you look at the latest set of policies from President Trump and his men and his women, you can see, you can say, what does this mean for me? What does it mean? Oh, hell, Tesla's down 12% in one day. Is Tesla, is it over? Has Elon Musk destroyed this brand, this company? You bring in rational thinking into something because you're being hit with an intensity of news. Every day there's a new Elon Musk story. If you just looked at one stock, you could burn yourself out trying to interpret what you've heard, blind to the fact that tomorrow the story is going to change and change rapidly. So when we as investors, what we need to do is get very good at ignoring noise and observing signals. Signals
Yeah.
come in the form, in so many different forms. I tweeted there night before last, or X. Do I say X or tweet? What do I say anymore? I'm
I
still
mean, you're the only one I know that still calls it X. Everyone
am I?
calls it Twitter still. Like,
Do they? The
yeah,
cheek. Do they have no respect for Elon Musk? So I tweeted the other night about the amount of insider buying at the moment.
yeah,
And in the last week, there were more insider buys that CEOs and CFOs, we've applied filters to our insider bot to try and remove non-signal trades. And there was more of those type of trades, qualifying trades from CEOs and CFOs buying shares in the businesses that they run than in any other week in 2024. They thought now's the right time. That's, I believe, a bigger level, a higher level signal. I don't believe it's noise. You can go deeper down and go, well, who bought what? And I enjoy doing that. But the bigger picture is leaders of businesses are buying now because they see a brighter economic future for the company that they're charged with running. That is a signal. But when I hear that a Tesla showroom has been burnt down or there's people protesting, you have to realize that firstly, very, very large sponsored, that behavior is in large part sponsored by politics and disagreement with what the administration is doing. And you will, as a news consumer side, you go either I will never buy a Tesla or Asher, that doesn't matter to me, whatever. But what I'm saying is that we have to get better as creatures at ignoring noise and observing signals. I'm not saying that you'll always get it right, but if you stick with a strategy, try and make sure that you use this stream of information as infotainment, but not as info,
Yeah,
also known
yeah.
as information.
Well, like it's behavioral psychology 101. Like the
Mm.
hardest times to buy are usually the most profitable times to
Oh
buy,
yeah,
and getting over getting over those emotional barriers you put on yourself. Um, yeah. So I'm not really sure what the point is. I think it's interesting that Europe is outperforming in such a way. I think it's a testament to us kind of pivoting a bit towards that side of things with charging and fearless and Nexus. I
yeah,
think the need for international diversification has always been present, but
yeah.
it's been easy to forget because of US's outperformance for such a long period. And maybe this is a
Mm.
bit of a light bulb moment of, okay, wait, maybe I need to rethink my portfolio construction a bit.
Mm.
Do I own 10, 15 stocks that are all in the US and no exposure to other countries? So yeah, there's a lot of lessons in there. I think you might have to parse them a bit because we just went on a bit of a rant. But
The
yeah,
whole show was very non-specific. We spoke about Druckenmiller's men, then his two fellas, and then we spoke a little bit about how money's leaving America, going into Europe, less so Japan. It's been a random walk around the planet, hasn't it?
yeah. And I think it's just testament to mean reversion at the end of the day, like as in US outperformed for ages. Japan, we're talking about Japan, it had the bad start to the year, but it's had an unbelievable last 5 years. Do you know what I mean? While Europe and China have a bad last 5 years and now they're doing well. So if it's as simple as that, sometimes maybe it is just, looking at you
Yeah.
straight in the face. But yeah, right. Before we keep rambling, we're going to finish the show with an elevator pitch. We haven't
Ah,
done
yeah. Let's get
in a while.
specific. That's
Let's just
great.
talk
I'm in
stocks.
my
Let's just
back in
stick to
my
what we
comfort
know.
zone. Oh, I was like, oh, Mike, please don't ask me about economic policy in Japan. Please don't bring me there. Right. Okay. Who's going to pitch what? Do you want to pitch one or will I pitch one or we both do one?
I've got one here, so I'll start
And
off.
I've got one as well. So I tell you what, hit me. And then I tell you
Uh,
what, just for fun, I'm gonna just score your pitch on a scale of 1 to 10. 10 meaning I'm gonna end this call and go off and buy it. 1 meaning I wouldn't buy it in a fit. Okay.
okay,
And then you
sounds good.
return the favor.
Yeah. Okay, so the company I am pitching is called Betsson. It's a gambling company, owns and operates a number of online sports books and casinos. It owns the brands Betsson, Nordic Bet, Casino Euro, Bet Safe. It also has a B2B division that licenses its sportsbook technology to other operators. It's from Sweden.
Mm-hmm. Oh,
Obviously, we're we're fairly predictable at this stage, but it is
mm.
another great business from
It's
that
funny you should
country.
say
And
because I'm gonna pitch you a Swedish one, but keep going.
there you go. It's no coincidence that great businesses come out of this country. We've talked about it before. But yeah, look, for people who have listened to this pod for a while, they know I'm a fan of gambling companies. But so much of it has been centered around the US opportunity. After it legalized online gambling federally, we have this state by state rollout. That market has become to be dominated by two companies, Flutter Entertainment and DraftKings. Flutter Entertainment would be Paddy Power to a lot of our Irish listeners. Betsson has gone a completely different route. So they're much smaller. They're a $2 billion company compared to Flutter, which is around 40, and DraftKings, which is closer to 20 billion. So Betsson decided last year to pull out of the B2C market in the US. It never really had a huge presence anyways, but instead of competing with the big boys where customer acquisition costs are sky high, it's investing in rapidly growing regions like Latin America, Central Asia, and Central and Eastern Europe instead. So in Latin America, in particular, its presence is really felt. It's actually the Boca Juniors, the famous Argentinian football team. It's a shirt sponsor for
Mm.
them. It's one of the first international players to be granted a gaming license in Brazil, which was just regulated last month, I believe. So Latin America as a region, we've talked about it with huge potential in a number of different verticals. Obviously, Mercado Libre is one of the most famous stocks to come out of there. It's been a long time winner for my Wall Street, but it has this growing middle class, increasing disposable income, and more an expanding internet adoption as well, which really fits into what Betsson is doing in terms of online gambling, which is an established trend in other places, but it can capitalize on the growth in these regions. And now it makes up about 26% of total revenues. So yeah, really promising business. 2024 was a record year. It passed €1 billion in revenue for the first time. Sales grew at 70%. It improved its margins, expanded cash flows, and increased its annual dividend while also adding a special dividend for shareholders on top of that.
Mm.
As a company, I feel like it's skating where the puck is going to, and it's established a strong presence in these future high value markets. So yeah, for exposure to gambling, if you like the industry as a whole, if you believe in the kind of global projections, I think Flutter has it at almost $600 billion opportunity by 2030. Betsson seems to be that kind of smaller, less talked about play in that space that I think could be a long term winner.
Wow. Okay, so I'm going to tell you, I started off at 5, and as you were talking, I went to 6. Then I went into the no man's land of 7, which is neither one thing nor another, and I ended at an 8. I think that sounds like a great opportunity. I presume revenue is starting to surge.
Yeah, yeah. So that's what I was saying. It's nearly at
Mm.
20% a year.
Mm.
So yeah, looking very promising, I think.
Okay, good. 8 out of 10 from me, Mike. I'm going to hit you with a shorter pitch. And those who are subscribed to Charging and Fearless will have heard of this one. It's also a Swedish company, and we pitched it via Charging and Fearless about 10 months ago. So it was on the 7th of May, it was just over 10 months ago. And it's called Invisio. And it's a Swedish company that specializes in advanced communication and hearing protection systems, specifically for those in military and law enforcement. So that immediately should ring a bell with people as an area where more money is being spent. And the basic premise of the Charging and Fearless pitch we made at the time was that more or less every militarized country was increasing their defense spending. And well, a lot of water has passed under the
Yeah, it's
bridge
been
since then.
turbocharged recently.
Oh yeah, the shares are up 100% since we pitched it, and still it feels very much like early days. Like Invisio delivered unreal financial performance in Q4 2024, which was the most recent one. It set new records on virtually every metric. Revenue is up 72% year over year to about 600 million Swedish kroner. Gross profit. And by the way, when you hear Swedish kroner, folks, the quick and easy way to bring it to either dollar or euros, just pretty much divide it by 10. Maybe 11 to get the dollar. So 600 million kroner revenue equals like $60 million revenue. Gross profit hit about $360 million. Gross margin improved to over 60%. EBITDA more than doubled to about 200 million Swedish kroner. And that kind of translated to about 35% EBITDA margin. Every number you look for in a business is improving, which is great. But when you look at the business itself, which I think at the time, and I didn't reread it, we said something like, this is a company that keeps the people safe who keep us safe, or something like that. Like, this is a business that is squarely in the area of keeping military safe, and specifically hearing products. And it really has incredible momentum. And for the full year of 2024, it had a 46% revenue increase to 1.8 billion Swedish kroner. So that's about $180 million. And when you just look at the US Department of Defense has proposed a budget of 850 billion for 2025. And as you touched on earlier on in our conversation about how money is moving around the world, European countries are enhancing their defense capabilities, and they've proposed 150 billion fund to already bolster the military strength. So
Yeah.
between
On top of the 150 billion
yes,
fund
more,
is accessible by all the European countries if they want to expand their own
yeah,
military base. But the EU is already investing 650 billion before that.
yeah, yeah,
Germany has promised 500 billion. Yeah, so there's serious money coming from Europe, and definitely looks like a stock set to capitalize on it.
I agree. It's a multi-trillion market opportunity, but not in the hand-waving sense, but literally budgets have been assigned and a portion of that budget is going to go to Invisio. No two ways about it. And that old favorite friend of ours describing a stock price graph, I mean, say revenue graph, it's incredible. It's like, how would I describe this one? It's like beautiful wave. If you're going to describe the shape of revenue since December 2015, the 10-year revenue curve looks like a beautiful wave just going up, up, up. Like just to put in perspective, by the end of 2021, the revenue was shy of 600 million kroner. And as I said a minute ago, by the end of December 2024, it was 1.8 billion kroner. So the curve just goes right up. But more impressively, if you ask me, is return on equity is getting better and better and better. It's just going up, up, up.
So it's
And
got operating leverage as well, which is always very important.
yeah, I just think it's going to be an absolute banger of an investment. I'm not saying I celebrate the underlying cause, not even nearly. But look, there you go, folks. You can either go with his betting company or my military defense spending
Yeah.
company. Not exactly
When you
uplifting
say it
stuff.
like that, it's a little bit grim.
It
But
is. Score me out of 10, Mike. Hit me.
I don't know. I suppose on a purely economical basis, I'll give it an 8. I won't bring in
Mm.
the moral quandaries of investing in defense companies before that, even though Invisio seems to be not on the same level of uh, some of the other ones.
No, I'd never pitch a company that makes something that hurts someone. That's the truth. Although,
Yeah, exactly.
well, cut to white shot. I'm sure I've recommended Brown and Foreman or something once, and well, you could drink
Well,
yourself
yeah,
to death. But
geez,
I mean, I'd never. But this is actually a company that keeps people safe, and I guess I'm making my peace with it because of that. But yeah, look, we could get analytical on it, but it makes hearing equipment for military people,
yeah. Okay.
like it or not.
Okay.
So
So
two
there's
eights. That's not bad.
not too bad.
I bet you those pair of stocks will do very well over the next 5 years if some person who randomly found our podcast listened to one episode and said, I'm all in on those two stocks. Write to us in 5 years and let us know how it went.
Okay. Emmett, thanks for joining me today. And thanks everyone for listening. We're going to talk to you next week.